The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Still up here in Blowing Rock, North Carolina, looking out on the best view I've seen in, the last decade. This is unbelievable scenery up here, guys. Wind's blowing about 50 miles an hour, and it's in the 50s. So a little different than being in the 90s where I'm usually at. And I'll be traveling to South Dakota later today, believe it or not, coming back and then heading to D.C. So travel week from heck here. So we're going to look at the dollar first, and we're going to look at the weekly. And if I can blow this up a little bit here. Talked about this, action down at the bottom, not really wanting to get away from this inflection point, 94. 12, 13. Now we started to dive already. I'm going to show you the daily here. Let me make sure. Okay. Just only one screen today again, folks. So having to juggle everything on one screen here. Here we go. So this can, not being able to get away from those weekly unfair lows, pretty important for the dollar when it comes to a continuation pattern, another move down. Again, just kind of sitting down there, hovering around, spinning around those 94, 12, 13 areas. Now we've had the dive. It's going to affect a lot of commodities having to reprice themselves. We're going to take a look at gold in particular in just a second. We're going to run through quite a few Dow 30 stocks. I want to kind of, the Dow's doing its, we're going to go straight north thing now, along with the S&Ps. We're going to take a look at quite a few Dow stocks. If you guys have got those in your portfolio, we just want to take a look at which ones are doing well, which ones are not doing well. We're going to take a look at the August gold situation here. Talked about this trade not being over and being able to look at 1234 as a support area. We hit a low yesterday of 1236. So, getting into that neighborhood, things aren't always to the tick, but, when we had talked yesterday, in fact, about this profile appearing below price action the past 2 days, actually. Very bullish scenario. That's the ultimate back the truck up area when that happens, 1234. And we talked about down into this 1230, 30 and a half, 31 area as a little bit of a collection area. Top of the mountain, big wide profile, and that POC having to be paid attention to when it comes to looking at these wide profiles, especially on a weekly. So didn't quite get there, got into that 36 area like we just spoke of, and have done a little bit of a $20 an ounce move straight up since then. Actually more than that. $23 an ounce move up. So pretty big move for gold this morning. Again, we talked about this. When that profile appears below price action, it's usually an oncoming bullish scenario setup. We're looking at the U.S. Treasuries. We're looking at the September contract right now. This is a very scary setup for shorts here, and I don't have to tell you that. And we've been talking about trying to stay long and strong until we got to some higher levels. On the September contract, we got 131.0708. And as we look at this, we're kind of getting up near there. We're just kind of consolidating, compressing up higher lows on this particular daily action. And this is what you want to see if you're long. I mean, you want to see this. And the market's going, making new highs, the stock market that is. This thing's not wanting to come off its consolidation continuation pattern. Here's the broad U.S. stock market. So you've got some things in your favor. And this is the daily chart of the S&Ps. You got some really good things in your favor here. S&P's going straight up, notes going sideways, and we've talked about that type of action before. And you've got, the globe now is just throwing out there all types of comments. I've read quite a few articles last night and this morning on some slowdown numbers, forecasts, global forecasts, China, blah, blah, blah. All those things combined, and you got the S&Ps basically on the all-time highs. If the S&Ps come off, remember, it's real simple. These notes are more than likely going to fly just by that, inverse reaction for the most part. You've also got the situation where classic technical analysis pattern spinning around up here. And if the market goes, continues to go higher, these notes may at worst go sideways. So you've got a nice trade again on these notes. And this is the S&Ps I'm showing now. And I'll go back to the notes. Let's see here. Where are we at? There we go. The September contract. And where do you play defense on this trade? Here's your 240s. I mean, these are always really, really good regulators of the trade up or down. If you want to if you're just waking up this morning and listening to me, first of all, I apologize. Could be scary. You've got 130.18 you can play defense against. And this is kind of another longer term tranche up here on the 10-year. All right. We're going to take a look at silver. We're going to look at July silver. That's what I show as a front month here. Getting back above 1644.45, big number here. There's 1643. Again, we came up into those inflection points here. We didn't want to kind of back off. And here's the 1644.43 on the daily, 44.45 on the weekly. And now that's going to be major support on this particular move up on silver. I don't know if we're going to look back here and give you a chance to get back in this thing. It was kind of either buy the breakout today, and those are hard to do. It makes me sick when I buy breakouts and then they pull back to support again. But again, I don't know if silver with the dollar doing what it's doing, some of the global slowdown numbers out there, inflation. Not necessarily on the rise here, but again, kind of a safety situation for what some folks are considering a possible scare in the third world economies, actually. So we're going to take a look at November beans really quick. We're going to take a look at a couple of commodities first today because of that dollar situation. Let me see where we're at with time here. And looking at these beans, I mean, we always talk about, when do we know when to start taking some off? And here's the daily. We've looked at the weekly. The weekly's given us zero reasons to get out of this long silver trade. But now looking at the daily, we don't have any yellow peelbacks in the scanner. We've got on the 240s, this is a situation. We're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show in Blowing Rock, North Carolina. Still, the wind's blowing about 50, it looks like, outside. Amazing place. God, gorgeous up here. Looking at November beans, we're kind of finishing with this. July beans are in the scanner, even up. Let me pull this up here really quick. Let's just go to the July bean situation. And here we go. So as we look at the price on July beans, my God, this is unbelievable. Okay, so I'm looking at our charts on the scanner. We're basically at 1150, and here's the daily. We got a profile appearing below price action on our daily on July beans. Now I'm going to kind of go back to November for a second here. This is the 240s on November. This is the daily on November. So even July got a new bullish indicator on that. Price action appearing below soybeans for the long-term trade. That's very bullish. And then we've got really zero indication. As soon as we broke out above 1063 recently, we're trading about 1128 right now on the November trade. So what do you do with this now? I don't think you can buy it up here. I think you've got to wait for retracements. There's no reason to take the long trade off if you're in it still right now. We've talked about a couple of different ways to, couple of different ways to take advantage of a situation like this. John from Philadelphia, if you guys haven't been watching the show, 875, that general area on this November contract, we're, let me do the math here. We're $2.50 a bushel higher, and doing a volatility play back then that we talked about, or just basically getting long and putting the stops in. I think stops were below 860, something in that neighborhood. Yeah, well, actually, let me pull up the chart here. So there's the bottom of the profile, 859 on the long term. There's that breakout above 915, the retest, and been very, very good to the people who have been in that trade. So as we look at a couple other things, we're going to look at oil just to hit the usual suspects. We usually do this every day. If you're joining the show for the first time, we usually try to cover the basic commodities that most folks in the world are looking at and what's driving some of some of the major indices. We're going to take a look at the crude trade here. This is July. As we look at this, as you can see, we've had not a lot of mitigating circumstances on a pure technical analysis pattern on the weekly, but we've been looking at a couple other factors around, and I've been very hesitant to go long. We looked at some of the XLE stocks that, we're kind of just still in ranges. We also looked at the Canadian dollar, which has now started becoming finally just insanely valued again relative to the US dollar. And then we've got, crude, which had kind of been outstretched a little bit past some of those indicators. And now I'm going to go back to the currency situation. We've got the dollar coming in hard. That's also, as you know, a lot of these commodities have to reprice themselves higher right now. But we're going to take a look at the Canadian dollar, which was kind of the thing that was slowing me down as far as getting real happy about going long gold. Now the Canadian dollar is just becoming valued. This is kind of an inverse chart when it comes to, this particular chart goes down, Canadian dollar becomes valued in this cross relationship the way we've got it paired right now. You do have some support at 125.55 now. I was thinking we were ultimately going to get into 133 before we started heading south. That didn't happen. This was also causing me to think that, there's something brewing in the Canadian dollar doesn't want to actually become valued again. That was also putting a little bit of a lid in my mind on crude oil, but the dollar caving in, it's almost by default got to reprice itself in a situation like this. And then some of these other things are going to follow suit. So let's also take a look at the Australian dollar. Kind of an amazing situation. I mean, China continues to put out some not so great data. But again, you've got the dollar coming in, you've got a little bit of a commodities rally. And the Canadian dollar, we talked about this one, 74.28, 74.25, 26, a little bit of a support situation after that breakout yesterday. We retested this morning, but this is the bigger picture here. You've got a major inflection point that we talked about was a target up top. Ultimately, from that 71.69 down below, that's where we said that, it's probably time to start looking at this again from the long side with stops below. We're about, let's see where the high is. We're actually 300 pips higher from that launching area down below. So now we've reached the targets we've talked about ultimately on the long side, which are around 74.46. And now you've got to sit here, and even though the dailies we've broken out, we've retested, this is a bigger inflection point to make sure you pay attention to. And I would just take everything off the table in the Australian dollar. We've been talking about being long here again since 71.69. There's no reason to stay and even keep anything in this trade right now. I think you have to wait and, just be happy with what's happened. So, again, not a big fan of staying long this right now. All right, so let's take a look at the Japanese yen. I mean, there's a lot of news out. If you guys have been reading any news at all, they're starting to have better numbers than they thought they were going to have. So, that's kind of disturbing for the Bank of Japan to try to, rig this thing into a more devalued state. So this is not the type of action you want to see in general if you want to play the long side. You've got fundamental news against you, but you also don't have lower lows being hit. Now, around 105.5, we talked about this long trade and getting into the targets of 110 and then kind of reassessing. This is one where you just kind of have to wait for more information. I'm not a big fan of shorting the Japanese yen, and there's no reason really at this stage to get long. You've also got a profile appearing well above price action, which is bearish in nature, and this is one where you're just gonna have to wait and see. No edge there, put it that way. Here's the euro. Did I say euro? Here we go. Haven't had the coffee this morning, folks. This house did not come equipped with it. 114.64.65. That's the targets up top on the euro. It's kind of interesting that it's not actually going a little higher today. But again, I think that's where you look at this from I got to take everything off the table about that stage, 114.65. Here's the daily again, from a pure technical analysis standpoint, it looks, you got this flag pennant situation going on here. So I feel like you're not a lot of danger there to reverse that. But again, here's the 240s. Here's where you play stops. 113.32 below there. I think you got to call it quits on this trade, and your target's above 114.65. Not an incredibly good risk reward trade on this one, but again, if you're waking up this morning, you notice how these profiles kind of guide these things up. After you can play defense very well using this information. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And, I think we've hit everything we need to hit. We usually, first 20, 30 minutes, try to cover the major inflection points you need to be aware of. You can get all of these in the scanner. I'm looking at the futures section right now. If you don't have this thing, get a demo. I think you'll find it extremely useful, as I do. I can't really trade without it anymore. I feel handicapped. I'm showing the indicators on our charts on eSignal right now, but you can actually get these same indicators right within the scanner. We're just showing eSignal right now. Let's take a look at a couple of stocks in the Dow right now. I wanted to kind of point out I want to look at American Express. Man, I wonder if these fintech guys are going to kill this one too. There's so many changes that are going to happen in the near future. Again, in the brokerage business, which is going to sting for some folks, but in the banking business too. I mean, we do some work for some pretty large merchant account services firms, and there is a major flux in that marketplace right now. American Express obviously is the kind of the bank on a lot of those deals. But as we look at this 66.48, we've reached some resistance here on this. I want to reference this is the long term on the weekly. I want to reference the XLF really quick. We've been kind of talking about staying away from this thing. You've got a yield curve problem here going on. You've got, the 10-year probably going to head higher. It's obviously kind of edged up here and made higher lows since, what is this, 19 and a half. We're trading 23.60. That's a big move. Looking back though, I mean, if you look at the S&Ps, I mean, it's kind of lagging what the S&Ps are doing in general here. I don't think this is the place to put money, and you've also got a couple of situations. If you're looking at the ETF in general in the scanner, and I'm going to go to the XLF section, where is it? Almost near the bottom there. Everything green. Isn't this kind of amazing, folks? It's actually in the seller when it comes to being the intermediate. Not the best net breath positive situation. So I'm going to go into AXP. Well, I may be wrong here. Hold on. Yeah, it's in the XLF. Why did I not see that? Let me go back here. Let's go back to the XLF. There it is. Oh, there it is. God, man. No coffee, Tammy. This is what happens. You go blind. All right. So as we look at this, here's the sell structure. And what we're doing, this is obviously not the weakest stock in here, but there are some stocks that are just not raising their hand at all when it comes to cooperating with the market going up. And the XLF's kind of been lagging. So what I'm going to do is I'm going to go over here and I'm going to look at stocks that are trading below profiles. I'm going to see if there's any edge here. AIV. Yeah, I don't like the way that's sitting on the weekly on for lows, but we're going to take a look at this one here. Let's take a look at Morgan Stanley. Now, I like this, and I like it because, you're sitting on the precipice here on the edge of a cliff on the daily. That's why it's saying we're at the bottom here. And you're also kind of coming up into, after a key reversal last week, you're coming up into 26.93 as a lid. So you got 26.93, you've got 26.60. If we start moving south on that one, I mean, the S&Ps could possibly edge up higher. That kind of rising tides lift all boats could happen. But you've got a situation here, I think, where you can play defense pretty well. Where's your targets on something like this? I think you just let the 240s kind of guide this thing down and possibly, stop you out on a kind of an expanding or contracting 240 other side of the box trade. All right, so what I did is I just wanted to see stocks trading below profiles on the daily. And if I go across here, if I look at BlackRock, let's take a look at this one. These are not the darlings of the short world here. Let me try to find a few. Let's look at this one, AIG. The reason I like this one is because, see that yellow peel back there? That means that we might have a new supply area happening in the long term, and we're actually kind of sitting, even though this stock in the last couple of weeks has not shown a lot of weakness except the last couple of days. I like how this thing has started trading below profiles on the daily, below 57.39. And you've also got that 57.52 sitting there. So again, kind of like a Morgan Stanley trade. I like this one a little bit better because we started breaking down the daily profiles for the first time in a long time on this stock. So I think you can play some defense here. And remember, if this 10-year gets on on the horse again and starts heading north. These guys have kind of, got a way to make money, obviously, in a non-widening yield curve situation, but it's not helping to have the 10-year go straight up and the 10-year rate go down. So, you could have a little bit more weakness in this sector. It's definitely one of the ones one of the sectors I'd be looking at to short and find opportunities within. And I'm going to go to the den really quick just to see if we have any questions here. All right. Nothing for me as usual. Just kidding. Okay, so we looked at some of the XLF stocks. There's some decent opportunities there. You just kind of pick through the scanner to find them. I want to take a look also at Intel. The tech sector, I'm just going to go down and show you kind of the XOK right now. This is what the ETF kind of looks like. We talked about that the other day. We talked about it getting back above 42.85 and kind of being a play up into the weekly and fair highs. The reason I'm pulling up Intel, let me pull it back up here, is because if you look at this, I don't know if you remember this. We were doing the show. This was about a year and a half ago, where crude oil kept kind of pinching in. So lower highs, higher lows, lower highs, higher lows, and that was around, I think that was around the $100 a barrel situation. And then finally, we started just completely coming unglued and getting out of that compression. If you kind of take a broad look at this, you've got a situation here where we're kind of, higher lows, lower highs. We're still sitting above weekly profiles here, and the long term on Intel, without question. Recently it's had a little bit of a ramp up, but I wouldn't get too carried away yet with Intel being the best long play out here. I still think we can get back into this profile below 30.84. So if you're looking at buying Intel in the breakouts right now, I don't know if that's the best thing in the world. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We were kind of talking about Intel and this kind of wedge that's happening here. I'm not really too excited about getting along this right now because of that, even though it is breaking out of some technical levels again. Let's take a look at the scanner really quick because the XLE, again, you know, I was not super excited about getting long crude oil for a number of reasons. Goldman Sachs, one of them, telling people to get long crude oil now after after a 65% rise in crude oil. Now they're telling people to get into oil. So we had some really good technical reasons. We were nibbling on oil around 29, but when we got into this 50 area, 47 actually, 48 is when I started not, you know, really thinking that we had a lot of gas left in us. This dollar situation obviously is adjusting that. But here's the ETF profile heat grid right now. Here's the XLE energy sector ranked on an intermediate. Now, we had been looking at this as also an indicator to kind of not get too excited about crude. I still don't think the move up into 51 here on the July contract is, you know, it could have been a little bit more rosier as far as the price action relative to what the dollar's doing. I'm still not super excited about it. And we had the XLE, which was, you know, the internals weren't exactly rosy. The Canadian dollar wasn't, the ruble wasn't. A lot of things going on there, and some, you know, possible slowdown in economic situations. But the XLE, we talked specifically about trying to buy strong stocks and sell weak stocks. There weren't a lot of weak stocks to sell in here, but you know, as you can see, I mean, I'm looking at ExxonMobil. I don't think you can get a bigger stock in the XLE than this. But here's the daily. We talked about these levels up here around 90.46, coupled with the daily and for highs around, if I can get my chart to work here, around 90.46, same levels. So if I go into the ExxonMobil grid here, you see top 9 and top 29. So there's the 90.46 there, there's the 90.46 there. So we're kind of edging up this morning, and yesterday we had a close above there actually. So here's where we're at. Looks like pre-market, almost trading 91. I'm looking for this, you know, I'm not excited about being long some of these stocks right now. I think crude's going to possibly settle back. So I'm looking at this as, if we can get now a daily close back below 90.5, I'd be looking to trade Exxon down into this, you know, lower number that we actually spoke of yesterday, 86.5, 87, somewhere in there. But again, you know, we're in the noise area right now, and you can play defense around here still. So, you know, if you want to be a little bit, have a little bit more risk on the table, you can start playing around with it now. We're still, the reason this says top down here is because we are still within the kind of variance noise factor around that major inflection point. So we may see some turn here in ExxonMobil South to at least revisit $3 or $4 lower. Okay. You really can't find any stocks in here that are just completely not doing what they're supposed to. We talked about NOV a lot. Now that thing is breaking out. I can't believe this. Let me pull this back up. NOV, excuse me. So we've had a big run up lately. We're sitting at the top of a profile here on the daily, obviously, but again, this break is quite a big deal here. And 3360. Now you've got to look at, this thing could run. I mean, this is obviously predicated to some degree on whether oil is going to continue to go higher. But I think you've got better long plays out there. I don't think you want to look at this as it's been on sale and it's breaking out. I mean, you've got much better long plays in the XLE. Let's take a look at Phillips 66 really quick. So here's the weekly, not exactly outperforming oil. This is one I'd really take a look at to come back possibly and revisit 4 points lower, 77.94, off of these weekly on for highs around 82. So again, not making new highs with oil relative to what it has done in the past. Here's the daily, not exactly getting me excited there. So if you're looking for 1-2 short, PSX doesn't look too bad. But again, I'd like to see crude oil start breaking down to really, get some momentum on some of these things. I mean, crude oil could still continue to go higher here. Let's look at CNX. This is one, again, a little bit scarier trade here. 1573. You got a chance to possibly trade this. A lot of times these fair auctions are completely explored. This might be a really good risk reward scenario. First stop down will be 1378. So I think you've got about a $2 upside on this, and you can play defense above 1573. CNX obviously not been the preferred go long stock in the XLE over the past year. Let's look at Anadarko Petroleum. Now this is one you don't want to go short. This is kind of block out one side of the marketplace, block out the short side on this one. You've got support now at 51.88. It's definitely trading relative to crude oil, making new highs when crude oil is making new highs here. This is one you want to stay away from on the short side. Let me check our time here. Okay. All right, I want to check a couple of other stocks I had on the list here today. Let's take a look at Caterpillar. All right, so you gotta look at the dollar getting weaker. This is a stock that is not going to complain about that. Here's the situation on the weekly. 78.88. We're not exactly outperforming the market here over the last couple of whatevers, but 78.88 is going to be your targets now. We've had a good move up. We've had the dollar reprice itself. This is a weekly view of Caterpillar. I think we've got the dollar with some more downside possibilities. 78.88 is going to be the target here. If you kind of bought the bust a move out of 72.87, you've got 78.88 as the target here. Here's the daily on Caterpillar, but remember that weekly on fair high is going to be your target. And we may have some new inflection points on the dollar at that stage when Caterpillar gets up to that area. So we're going to have to kind of look and see if we have kind of a scissors ricochet action with Caterpillar hitting those weekly and for highs in the dollar, possibly putting in a new low there. Let me check my time, guys. I got one screen. Okay, we're going to go to our next to last break, and we will be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. And apologize. I've only got one screen today, so I hadn't been able to really look at the comments in the den in a timely manner. Here's, let's see, Noble Corp, PLC, a request out of the den, just kind of asking an opinion here. I mean, you know, this was kind of exciting when it broke out above 10 and came back and retested. Right now, this thing, you know, I mean, if you look back in time, I mean, it's kind of done this before, consolidated. We're back in a long-term profile. I think you've got to have a weekly close above 956 to get excited about it again. And you've also, yes, you've probably got better things to play around with from the long side here. I really, this is something that could do another flush and get below 738. So that's my opinion on that one. Joy Global, you know, this is one I like how this is our weekly on Joy. I like how it's, you know, broken trend, came back and retested, found support again, and here's the weekly. This is the daily on Joy. Wow. So I think you've got support around 2069 right now. And what do you do with it? Do you take it off if you're long? I don't think you've got any real reasons to take the long off right now. I think you've got a reason to actually add to the long. And I like how it's acting relative to the, you know, the broad market right now. I like this bottom information. I also like that our navigator's crossing above zero for the first time since Let's see here. October 2014. That's kind of awesome. So you got a lot of things in your favor here. 2069 initial support, 1802 long-term support on this right now. Well, I hit the wrong button here. Let's see. Okay. Let's see. All right. Let me see how much time we have. Okay, 2 minutes. Here we go. Let's take a look at Facebook. This is one where, you just don't short it. I mean, it's the same story here. Nothing new. Consolidation at best. You got big time support, 113.64. We talked about that. Here's the daily. Nothing really to hang on to there. So, again, block out the short side. Do not play around with this on the short side. We're going to take a look at Apple. And this is one, we're not actually looking at this as a great market, go long participant right now. We've talked about getting back down below 98.64. We talked about the market possibly dragging a lot of things up right now, but Apple's, not really looking exactly exciting from the long side. So what do you do with Apple? I don't think you look at this as an investment grade stock anymore right now. I think, and we've talked about that, I think you got to look at this as, the market, if the market does come off, this stock has a really good chance to come off because it's shown its hand over time of kind of people wanting to exit this thing. Obviously you've had a little bit of a buying activity lately, about what is that, a 12% move up from 90 to 100, or 90 and some change to 100. So again, this is one I'm not excited on the long side about this, and I think you've got some areas to play defense against. Again, you're banking on the market turning south in general. And we're going to take a look at Tesla. Man, is Elon Musk in the news a lot or what? Ooh. He's becoming Trumpish when it comes to being a news hound. Unfair lows. 2033, we've run up all the way into that resistance area. So look for this to be a short on a trading opportunity right now, folks. Thanks for joining us. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.